Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for coming on today.
Good afternoon.
Well, stocks in New York, let's start there. They were down sharply on Thursday ahead of the U.S. inflation numbers due out on Friday. Also, the European Central Bank about to raise interest rates for the first time in 11 years. The S&P off by almost 2.4%. Tell us about the global markets and what we might be looking at with the inflation data.
Yes, on Thursday, the Dow fell by 1.94%, while S&P 500 and NASDAQ fell more than 2%, 2.38% and 2.75% respectively. Mega cap tech names led the decline with the sharp losses from the Meta platforms down by 6.4%, Alphabet down by 2%, Apple minus 3.6%, Microsoft minus 2.1%, NVIDIA minus 3.2%. It seems that these losses are coming as the investor continues to assess the outlook for inflation and economic growth ahead of the tonight's U.S. Consumer Price Index report. The hotter inflation number might indicate that the Federal Reserve will continue to do aggressive tightening as they have done in the last meeting. And also on June, they're expected to raise by another 0.5% and maybe another one by 0.5% in July. And if that continues to do so, then obviously that will hinder the economic growth rate, and economy will slow down and possibly maybe enter the economic recession. On top of this news, if you look at the European central banks, they have announced that they will start raising interest rate next month, which is a bit earlier than expected. And it seems that the analysts consider continue to be the overall global monetary environment is negative for the equity market in overall. We will have to wait and see how the core consumer price index will be coming through. We already know that because of such a high oil prices, the overall inflation number is not going to go down that much. But I guess we need to look at the core inflation number, excluding the energy prices and food prices. If that indicates that a slowing down is happening, then market will take that as a positive news, and the Fed tightening will be on schedule as expected rather than being more hawkish. Then market will be in good positions to recover. But if that's not the case, where core inflation continues to be very high and it doesn't fall, then people will be looking into further sell out of the equity market in the future. We'll wait and see. We'll have to wait and see how the inflation plays out. But in our view, that inflation has peaked in March, and it is expected to gradually go down. Therefore, the current volatility should not be the indication of a further fallout of the equity market, but rather a volatility in the meantime and gradually recover in the future in the second half of this year.
Well, it was a similar story here in Korea today with concerns about monetary tightening. We saw the exchange rate creeping back up. The KOSPI down more than 1% and the KOSDAQ about 0.8%. Banks were leading the declines here in Seoul. What's the story in the domestic market?
Yes, as you said, the KOSPI is down by 1.13% and KOSDAQ is down by 0.83%. It seems that the foreign investors are continuing to be a net seller despite the currency movement in a positive direction where the won appreciating. If you look at the foreigners, they have sold about 797 billion won worth of KOSPI and sold about 52.8 billion won of KOSDAQ. And also on top of that, they sold 396 billion won of futures market. So if you add all that up, that amounts to 1.2 trillion won worth of net selling. This continues, then we think that the currency is not going to be appreciating aggressively, but rather it could depreciate further. We did see some positive movement of the U.S. dollar index, where the dollar appreciated. Obviously, that resulted into depreciation of Korean won. Foreign investors are net sellers, but if you look at the retail investors and institutional investors, they are pretty much net buyer of the Korean market. If you remember 2007 and 8, maybe starting from 2005, foreigners will continue to be net sellers, but rather the domestic institutions were the buyer of the market, and that drove the KOSPI up higher. We think that possibility could happen in the future. But of course, depending on what kind of liquidity condition will be implied. If you look at the Bank of Korea, they have said that they will adopt more tightening measures for monetary policies in the next few months as the U.S. raises interest rate. If that's the case, then the liquidity condition domestically is not going to be that necessarily positive, and foreign investor needs to be coming back in order for the markets to do a strong movement in a positive territories. Overall, we think that on a fundamental basis, however, KOSPI is well undervalued on the basis of residual income model. We estimate the fair value of KOSPI to be over 3,200, and it is at 2,600 level. Obviously, a huge discount. But obviously, in order for that discount to disappear, we need to see better corporate governance, and we need to see the foreign investors coming back to the Korean market.
Yeah, governance being a chronic issue for the market. Well, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on. We appreciate your insights, and have a great weekend.
Thank you. You too.